Hey y'all! Thank you so much for tuning in to another IG Live on the Responsible Homegirl page. If you are listening to the replay, thank you for tuning back into another episode on the Responsible Homegirl podcast. So today we are going to be talking about rebuilding your credit. I get so many questions all the time about rebuilding your credit. How can I do this? How can I do that? But the truth is, y'all, I don't know. I don't know nothing about rebuilding your credit. So what I did was I invited my friends from Supreme Financial, and they're going to hop on and they're going to give us all of the credit gems, because there's a huge difference between rebuilding credit and building credit. I have never, ever, ever rebuilt my credit. I started off with no credit. So starting off with no credit, even though it's just like having poor credit because nobody can vouch for you, it's different with like how you actually increase your credit score. So I can tell you all day, all night how to build your credit. But as far as rebuilding credit, that is not my ministry at all. So that's exactly what we're going to do tonight, or that's exactly what we're going to talk about tonight with Supreme. So as soon as they hop on, Dez and Devin, I'm going to bring them on the live and we're going to get started. Before we get into today's episode, let me put you on Kikoff. You know I always preach that credit can get you what cash can't. So I want you to listen really closely as I explain how Kikoff works and how you can use it to improve your credit score. So when you sign up for Kikoff, you pay $2 a month, and they are reporting that to the 3 major credit bureaus. One of the main things that I like is that you automatically get access to a $500 line of credit without them even pulling your credit. So make sure you take advantage of everything that they're offering you. There are no interest, no fees, none of that stuff. So check out Kikoff and use my link below. So hey y'all, thank y'all so much for tuning in to this live. Of course, I have my homeboys with me tonight, Dez, Devin from Financial. And tonight we're going to be talking a whole lot about rebuilding your credit. So like I always tell y'all, so many people, they ask me different questions about building credit, rebuilding your credit. But I have never, ever, ever rebuilt my credit. And y'all in the credit industry, y'all know that there's a difference between building your credit and rebuilding your credit. Right or wrong?
Yes, this is very true.
Yeah. So tonight, I just want to have a real conversation about rebuilding your credit for one. And I want to kind of get over some myths that people may believe about credit. And then the last thing I want to touch on is how having bad credit is actually costing people more than what they think.
Okay, cool.
So we're going to dive deep into this conversation. Just to get started, I want to introduce yourselves. Tell the people how y'all even came into this industry. Why y'all even care about credit for real?
I'm Desmond. I'm Desmond Haygood, co-owner of Supreme Financial. You want to introduce yourself first, Devin, or you want to?
Go ahead, bro.
All right. So basically, this is my partner, Devin Barnes. We came into the industry because one, myself personally, I had bad credit at one point in time. So having bad credit, had to figure out some things, and I seen how costly credit repair was. And it was an uphill battle to kind of get my stuff straight, just because of my current job at the time and just where my scores was at. So I had to do some research on my own to kind of get it done. Devin came to me in the middle of that time of starting a business and anything like that. He just came to me with a business plan, like when we just discussed a business plan together. And then he was on the insurance and financial investment side of things. So then once I fixed my own credit, I was like, I can help people that was in my similar position at a more affordable cost. And went to Devin and pitched him an idea, and we was like, well, we should partner up with both of our sides and just make Supreme a financial institution.
I love that so much. I love it. I love it. Devin?
Devin Barnes, the other co-owner of Supreme. Like Desmond said, you take care of the credit side of it. We just started off from some things we didn't know about, family history, just within the industry and within our community, just not knowing a lot about the financial area, from banking to insurance to, investing type of things. And we are business majors, both from South Carolina State University. So just a lot of ideas we always shoot it off to each other. That was when I was like, bro, we definitely in this area. We both had some struggles, and we're doing it now. Let's just put it together for ourselves. And we started actually on Juneteenth when Juneteenth became a thing. So
That's true.
I haven't looked back since then.
And the reason why I love y'all brand so much is, one, all of us, we are under 30. And I feel like we grow up in these families and these different households where it's not talked about. So we are kind of expected. So, you know, we go to college, get these degrees, and have it all figured out. But it's like, how are we going to know about money if nobody has ever taught us? So unfortunately, sometimes we have to fall flat on our face or make mistakes. But it takes people like us making these mistakes and then reaching back and saying, okay, even though you're in your 20s, you still need to be concerned about your credit. Even though you still need to be concerned about your financial future and planning and all that type of stuff. So I just want to go ahead and get started with rebuilding credit. So the first thing, something that really surprised me was sometimes when you pay collections, it may not positively impact your credit score. So can you talk about that? Because I feel like a lot of people, they look at their credit report and be like, oh, I need to pay this, I need to pay that, and my credit score going to shoot up.
Yeah, the first thing to understand, what we teach all of our clients is to first understand that you need to understand the company you're paying, because a lot of these companies will just call you and say you owe us money. So you need to reach out to that company. A lot of people are scared to even talk to the company. So you need to get a rep on the phone and actually understand, where is this debt coming from, and is this number even accurate? And when you figure out that number is accurate, you need to ask them one thing: when I pay this collection, will it be deleted from my account? Some of them are going to tell you yes, and then some are going to tell you the word they try to get you with is it will be updated. It will update to reflect payment. When you hear that, that's not deleted. That's not deletion. That is updated to show payment. So a bad collection will stay on your report from 7 years of the last date of activity. So for instance, if you had something in 2022 this year and it was a collection, it wouldn't come off your credit to 2029. So if you decided to pay that this year and they tell you it's going to update, the balance is now just going to show zero, but it still will stay on your account until 2029. So you need to ask them, will it be deleted upon payment? And sometimes they'll tell you, well, we work out deletions, or they'll cut you a deal. Because what they try to do is they'll try to cut us a deal. So you might owe $500 and they'll tell you, well, you could pay $200 and it'll update to say zero. But that's still on your credit report for 7 years. So it still affects you negatively the same as if you never paid it. So that's a great question. I hope I gave a decent answer on that.
Yeah, that's really good. So the first thing that kind of stood out to me was like, you need to talk to a representative. Do you recommend that people call themselves? Like, in y'all past experience, do clients really, like, I don't want to say have the capabilities, or do you have to know extra stuff to pick up the phone and call them?
No, because it's a simple conversation. Initially it's a simple conversation. You just don't, in a sense, you want to play dumb. You just want to say, hey, what is this? Who do I owe? How did it become your account? Like, you just want to ask those simple questions. You don't have to act like you're someone else. You don't have to act afraid. They're human. They're required by law to give you information because they're saying you owe them a bill.
Right.
And they will try to invoke the law to get that payment out of you. So you need to, hey, my name is Desmond Haygood. Where's this from? They have to give you A to Z. They should be able to tell you when it happened, who they got it from, and how much they're trying to get out of it now. So yeah, the normal person can handle that conversation. Now, if it's a tricky person and they're being stubborn or they're using tricky language that you don't understand, that's when you need to reach out to a professional. Or you can call us from the start and we can handle all of that for you.
So another question, just to follow up from that, when you call and they say like, oh, your account will be updated, this phrase, whatever. If you don't pay it, then what?
That's tricky. So in general, a collection account will hurt you the most within the first 24 months. So the first 2 years of being on your account. That's when it initially comes on, your score can drop anywhere from 10 to 60. I done seen people scores drop 80 points just off of one collection. Yeah, like it's dependent upon how each credit bureau how serious it takes this collection account. So, but it's the thing of you have that 24-month period. So in year 3, it's shouldn't hurt you as much because it's already had the effect of it. So if you call them in year 3 and you refuse to pay them, it's going to fall off your account in 7 years. And if you do pay them, it's still going to fall off your account in 7 years. It's still going to hurt you the same. It's a collection account. So when you go get that car or that house, and also, yeah, that's the other part. If you're trying to get something, so if you're trying to get a house or a car, the creditor may see that as an outstanding balance. So you need to understand that. Like, hey, this account I do have a collection. How do you guys view this? It may be hurting you because it has a balance on it. Some people would tell you, pay it off, and it shows better on you going back and pay that debt. So you need to kind of understand those things. And working with us will help you, or working with any professional, it's not just us. Anybody that does their job, they will let you know, like, these are the steps you need to take. Just because you pay it doesn't mean it's going to help you or hurt you. You just need to understand what you're dealing with.
Right. So with rebuilding credit, what's like some I'll see that really hurt people, that really keep them down from getting, like, I would say, the things that they want to get, that they need credit for?
The first thing is all three of us probably, well, you don't have them, but me and Devin, student loans. Like, that's the first thing. Student loans are like, we don't take care of those in the time period that we're supposed to upon graduating or finishing school. As most of us know, we have 6 months from your last class or from graduation to set up a payment plan or start paying on your student loans. What we see is a lot of people will don't contact their student loan provider, and that's negatively affecting your credit score every month from that period. So that's a big thing, especially in our community. We don't understand how to take care of these student loans.
So it's not good to ignore these people.
No, you need to take care of that.
Gotta talk to Sally Mae.
Yeah, you have to. That should be your first call. Like, and it's not even graduating. If you take a semester off, like, let's say you say I'm taking a semester off, like, in that 6 month period, you need to contact them and let them know, hey, I'm either taking it off and they're very lenient upon working with you on an income-based payment plan. Like, some payment plans are $5 to $10, just that small, but that gives you a positive credit history. Like, we don't understand. We duck the calls, and we're not trying to give them $1,000 a month, of course, but you need to have some type of relationship with them so it's not negatively impacting your credit.
I'm so happy you brought that up, because I feel like a lot of people in our community, they don't do anything with their student loans because they don't even know that that's an option. So for anybody listening right now who just got their student loans doing whatever, can you kind of give them like some 1, 2, 3 steps? Like, I want you to actually break it down. Like, what can they do today to take care of that?
The first one is to contact your student loan provider. So if you filled out student loans, you should be able to go to the student loan website. It's not coming to me right now, but just Google wherever you did your FAFSA. You can Google that website, go there, and it will break down to you how many loans you have and who you owe, the contact number for each. So you just will call out to them,
Federal and private?
Yes, it will tell you that information. Like, these, I'm not sure about private. I haven't dealt with private, but I know federal, that is how you find it. Private is different because it might be a bank or whoever it is loaning to you. But if you do have a private, reach out to your bank or that person, whoever you got it through. But federal, you go to the website, it will tell you exactly who your loan is with. Contact them. You have 6 months between the time, even if you already missed that time period. Contact them and just let them know, hey, I have a student loan with you guys. I'm trying to set up a payment plan. I mean, I'm telling you, I have some clients that right now are paying, especially since COVID hit, people were paying $0, and they've been getting positive impacts on their credit just having that payment plan set up. So that is the biggest thing. Like, so that's the second step. Contact them, and if you want to do an income-driven payment plan, they will simply send you a letter. You'll have to fill out what are your expenses each month, what is your income each month, and just based on that, they will give you a payment plan on that number. And sometimes you can tell them, hey, that's a little bit too pricey. I can't afford that just based on X, Y, Z, and they will bring that payment down sometimes. So that is the biggest thing. Just reach out, have a conversation the same way we talked about having a conversation with the collection agency. Just, we're grown, like we're all, we have to have those conversations as grown-ups.
The first thing you told them, I think it's studentloan.gov or something like that, or federal student aid. Just Google that, then contact loan provider, and then tell them that you want an income-based driven repayment plan.
Yes.
Okay, and then you have to fill out your income, expenses, all of that other stuff, and then they'll give you a payment plan based on that information.
Yep. It's myfedloan.org. That's the website. So it should be able to tell you. You should already have an account if you apply for student loans. Go there, fill it out, and that should get you where you need to go as far as the student loans are.
And then after people actually take action and address their student loans, have y'all seen how I don't want to say instantly, but over time, getting that payment plan that helps raise that credit score?
Oh, yeah. So I had a client that was in default of their student loan since 2016. No lie. I have like they hadn't paid a student loan since 2016. But they were trying to get a house. They called me at the beginning of 2020. And we tried our methods. Like, I didn't lie to them. I said, hey, I can't guarantee you that we'll be able to get these deleted, because we are able to get them deleted sometimes. But the trick with student loans are they're federal loans. So they're going to come back. Even if they're deleted, like, you owe those loans. Like, you can't get rid of those. So I tried some methods for the person. I'm like, hey, just be patient with us. It's at the beginning of 2020. They were spending money with us. I think we tried for like 5 or 6 months to get them deleted. And I told them, I said, hey, the best thing I feel for you to do is to set up a payment plan. Like, honestly, I said, you're in default. So to get out of default, you have to make 9 consecutive payments. And on the 10th payment, you come out of default and they allow you to set up a payment plan. The great thing for this client was it was COVID. So their 9 consecutive payments were all $0 payments. And even when they did their payment plan, it was only $10 a month that they had to pay. So on that 9th payment, I promise you, this person had like a 583 credit score. Like, they just finished up their payment plan this July, so July 2022. So it took some time. You have to be patient with things like this. Like, they didn't pay a loan for 4 years, you know. So, and upon this year right now, I will send you the screenshot so you can verify this. They have around a 740 credit score, like in 2 years, just taking care of their student loans. We got them on a strict credit plan and helped them out, and in 2 years they went from out of 583 to around a 740. So it works. Like, you have to take care of these people, and they haven't paid a dime.
Right. And for y'all listening, I want y'all to understand, like, having a 740 is a huge deal. That's just like having an 800 credit score.
Yes.
And one thing that I want you to point out again, you have to be patient. You went 4 or 5 years without paying people. Y'all are not going to raise your credit score overnight.
No, it's not overnight. It's not. Now we're honest with our clients. Like, we don't try to sell dreams. If it's something that you have on there, and we can get it off, like, I'm very honest with our clients on, hey, this is the plan I see for you. But with student loans, it's so finicky. I would never lie to anyone about student loans. We're not the student loan doctors. Like, we have to abide by the laws, because I don't want us to be able to get it deleted, and then you come back to us and say it's back on my credit report. You know, we don't want to lie to you in that sense. You know, and even if you try to go get a home, it may be deleted on the regular reports you get, but it might still be there in the background. You know, it just depends on who you go through for your home loan. So these are all things, like, we're not trying to finesse people. And that was another reason why we started business, because we've seen a lot of mistruths and inaccuracies in things people were telling our community. So we wanted to come in and kind of give people the truth and the honesty about how things work financially and credit wise.
Right. And to be honest with y'all, like, even in my head, it don't seem right. Like, I got debt and my debt is being deleted. Like, how can I just get rid of debt?
Yeah, it's certain things. So
explain that to me.
So there's certain things with it. So in certain cases, that's why I say you need to know the difference between your loans, because, for instance, like a medical collection, those are some of the highest collections, and they're trying to pass a law now to where medical collections no longer affect your credit as much. But with a medical collection, like, let's say me, Devin, and Key, we all started a debt collection company. We call it a responsible debt collection company. We can literally call hospitals and pay for people's debts.
Wow.
Right. So, and in that, we would be required to get certain paperwork. So how the credit act will hold our company responsible for going about certain laws. So we need to have the paperwork, we need to have the right information, and we need to have the right amount. If anything is off in that, it's technically what's the word they use? It's technically inaccurate and untruthful information. So it should be deleted, because that is not information. And so now the hospital has gotten rid of the legal actual bill. The people I owe has already cleared the books of my debt. It's this third party that now has it. And they're the one that's holding me accountable now. But if they didn't go through the right steps A to Z to have that information, it should be deleted. So that's how a debt could actually be deleted, because the people who now own the debt didn't go through the proper procedures of having it.
So you're responsible for checking that stuff. Is that y'all job?
Who? Supreme?
I'm just asking. I don't know. Like,
you saying who's responsible for checking if the information is accurate?
Yeah.
Yeah, that would be Supreme. So that's how credit company would work. Is we would make sure that they have the right documents on you. So like, just because they're calling Kiani and they have your right name, they have your right date of birth, who's to say they got that information legally? Like Devin could have called and had some inside information and just knew you was at the hospital on that day. He knew your birthday. And he's like, well, you owe us $600. That's your right bill. But does Devin have those documents to say, Kiani, you owe Devin? You might owe the hospital, but do you owe Devin? You know, so it's all of that kind of goes in the thing. So, yeah.
That is very, very, very interesting. And it's giving scam a little bit.
Oh,
like,
yes.
A regular company can literally just go to a hospital and pay debt, and like, that's crazy.
Yeah, they build relationships at this point. So what you would normally see, we see about the same 7 to 10 collection agencies collecting a major part because they have the proper relationships. So you might have a medical, a hospital that only sells their debt to this one collection company because they have a great relationships and they're good at closing. You know, they just have a relationship with them. So you will see that a lot. And then they might, and it's about who can pay the most too. So a lot of these collection companies are buying your debts for 50 to 75% of what it actually is. So if it's if you owe the hospital $700, the hospital is trying to write your debt off. So the hospital is trying to get paid for it twice. So they already wrote that $1,000 off. Now this collection company says I have another $500 for Desmond's debt. And so now the hospital has made $1,500 on Desmond on a $1,000 balance. So now the collection company is calling you, telling you owe them $1,000. But when you offer them $600, they take it because that's a $100 profit for them.
Wow.
So that's the entire game.
Mm-hmm. And then, like, people who's listening right now who want to rebuild their credit, their issue comes in once the medical bill gets to collection, and it's been in collections, you would say less than 2 years, that's negative impacting them.
Yeah. So the thing with medical collections, generally most collections come on your report between 1 to 6, around 5 to 6 months of you having the debt. But with hospitals, their turnover is so high, they like to get things out of their system. So they send you to collections the fastest. They send you around 3 months. So around 3 billing cycles. Yeah. Once they contact you 3 times and you fail to reply, you go to collections. So in that first initial period, like that's going to be the highest hit on your credit score. Like I said, somewhere between 10 to 60, 70, 80 points. And then every month from then, it's going to be like 2 points here, 3 points there. But, you know, the brunt of it is already done. But now when you go get that car, instead of having a 700, you have a 620. And we all know that's the difference between a 3% interest rate and a 10% interest rate. And we know the difference in money that makes over a 5 to 6 year period. So yeah, that initial time period and then the 2 years afterwards, because your credit report is kind of like it shows what you've been up to lately. And somebody would be like, well, yeah, Desmond has this collection from 2016. That's 6 years ago. He could have done a lot better in that time period. You know, they hold you responsible for those first 2 years, but you could have changed the person. You could have had a better job. You could be actually building something now in 2022 as opposed to 2016. So that's why those first initial 24 months are probably the toughest.
Gotcha. Okay, so I want to talk about one last, then I want to segue into like financial planning and just preparing for the future. And I'm pretty sure both of y'all can touch on what I'm about to segue into now. The cost of having bad or poor credit. About that because I know for a fact I've heard it out of people's mouths like, I don't need credit, I got cash. But when they need credit, not only is it kind of difficult for them to get the things that they want, but they're taxed at a way higher rate than, let's just say, somebody with good or great credit. So can we just talk about that for a little minute?
Yeah. I can touch on it. Devin, you want to touch on anything or?
Yeah, go ahead. We can. I think we
Okay. Just a personal story. Like I was denied for an apartment one time because of where my credit was at. Like, and then another time where my credit was at, I had to pay a higher deposit because of it. You know, so that's the things people don't think about. Yeah, you have cash, but now you have to pay first and last month rent to get into an apartment that you can afford, but your credit score is not up to par.
Right.
And then as we talked about with interest rates, if you can get something on a 2 to 3% interest rate, that is great, especially on a big loan like a home. If you have a $2,000 home on a 1 to 2% interest rate, that's a big difference between having a $2,000 loan on a 7 or 10% interest rate. Like that, we're talking about tens of thousands of dollars over the 30 years of a loan like that. Even on your car, you will have people driving nice cars, but they're paying 15 to 20% on that car. Like that is crazy. That is mind-boggling when you think about the numbers that you have to pay in interest.
Yeah.
So yeah, like credit can cost you more money. Like it doesn't seem, you have the cash, yes, but the rich stay rich because they keep their cash. The wealthy stay wealthy because they keep their cash. They don't just dish out money because they have it. Like that's not how you build generational wealth. That's not how you stay at a certain level. If you're overpaying for anything, that's too much, truly.
And I'm happy
yeah.
that overpaying. It's overpaying because you may not see it right then and there, but best believe you're gonna see it over time. A car that may cost you 10 grand, you got a 10% over that 5-year period, you may be paying double for that car.
Yes, 20 to 25. And how compound interest works is, as the higher the balance, it's so many ways we can go with this. It's crazy. It's crazy. Like most people don't understand how their car loan works. It's like your car loan, your interest rate based upon the loan balance at that month. Mm-hmm. So when the loan balance is $10,000, the interest rate goes against that. So that's why they try to tell you to pay towards the principal as much as you can, because as long as that balance is high, like your interest rate is hitting it, whatever that number is. So it's so many ways we can go with that. So I'm gonna stop before I start rambling. But
that's a rabbit hole. That's a rabbit hole.
Yeah.
That's a true rabbit hole.
So now, y'all, let's segue into financial planning, something that I feel is super duper duper important because, like we said earlier, especially within the Black community, these are conversations that I would say they're being had more, but in the past, they weren't really. When we talk about investing for our future, when we talk about preparing for, like, when we leave this world, these really aren't topics that are hot topics. Like, these things don't pop up in our face, unfortunately, until something bad happens. So, Devin, can you touch on, like, in your line of work, like, what should people our age be doing right now to set themselves up for the future?
I'll say the biggest thing is, we got to get away from the idea of you can't count people's pockets or, stop worrying about what other people's money is. That conversation, you never know, talking to a coworker or a colleague or a friend, what they done or what their parents done, maybe at their first year of that job, that can set you up a better time. We like to think about, I don't want to retire at age 56 or 60, because we don't retire at age 35, but just starting early, You got to start early, man, from retirement standpoint, from every job you get, you should at least do the bare minimum to the retirement plan to, at least some type of insurance outside of work. If you did get fired, you don't have any insurance, and that's what piggybacks to people want to think about money now because, we all had to do GoFundMe or some type of aspect of selling or raising funds for someone who we thought had cash, because at the end of the day, if it is cash, if you do got $50,000 in your bank account, if you die there tomorrow, your family cannot access that. If they don't have a beneficiary on your bank account, they can access that for maybe months down the road when you need to be buried within a week. So, life insurance, put a beneficiary on all your accounts. Those small things, by that alone, on top of retirement plan with your job, takes care of that basic connotation that we don't take care of when we start a job.
Right. One good thing, it was so many good things, but one thing I want to pull from it, the first thing is having or taking the time to invest in your employer's retirement plan. I know all of us listening, my community is filled with young adults. I know y'all want all y'all money on y'all check, but if your employer offers you a 401k and even further a company match, you should definitely consider contributing to that 401k, because just like they were talking about compound interest with debt, there's a such thing as compound interest with investing. So the earlier you start, the better you start. And not only that, you're getting quote unquote free money when your company actually matches whatever it is that you're contributing as well.
Yeah, that's crazy because like how you got like how I talk about credit, like listen to Devin talk about the insurance aspect thing. Like he's educated me on a lot, and like just from you guys, what you guys just said, like having those conversations. Like before we were in these realms, me and Devin weren't having these conversations, but it's like now I have a personal finance guy, which also is my business partner, but he educates me on a lot of these things. And so these conversations are definitely important. Like so what you guys are doing in that realm is unbelievable for sure.
Yeah. And then Devin, can we also touch on life insurance, especially with, I'm gonna just say 20 somethings because that's really my target group. And the importance of having life insurance and how it's not even as expensive as people may think.
Yeah, life insurance is for some reason, there's a lot of different reasons why the life insurance conversation is tough in our community, you know, from having an insurance policy that our grandparents had back in the old days that it wasn't what they thought it was. So
Right.
maybe when their grandparents passed away at that age, the policy didn't exist, or it wasn't enough money that they thought of it, or understanding, giving to a deeper concept, or maybe they wanted to take a loan out of it. You know, there's a lot of different ways to structure life insurance policies, but at a bare minimum, I believe that people should have some type of life insurance coverage outside of work. I am a firm believer in having a permanent coverage, whether it's, you know, investing in the market or if it's just strictly just a permanent coverage. But as far as age-wise, the cheaper you are today is the cheapest that life insurance is going to be. The older you get, the more expensive it gets. You know, it can be whatever your vice is. If it's going out hanging out, that's hanging out once a month, and that's paid for the rest of the month for your life insurance policy. If you can go do whatever, if you pay car insurance, you know, it should be just that important to have life insurance on your life, you know. Not about you, for your family. If you feel like it's not about your family, you want to care about yourself, there's some things that you can benefit from your life insurance policy while you're still living as well, you know. But if you know, your insurance, your money, your car is insured, you don't believe in life insurance, I'm telling you that your job have insurance on you, so do it for yourself and take care of your family as well.
Right.
It's
And
definitely important.
people need to understand that you don't buy life insurance with money. You buy life insurance with your health and your age. So just imagine you get into a point or a place in your life where you want life insurance, but you're denied because you're not healthy enough for it. So that's another reason why it's so important that we take advantage of how young we are right now. We're not getting no help. I mean, well, we can get healthier, but we're not getting younger for sure.
Younger, no.
We're not getting. So it's definitely important to take advantage of that. So thank you for sharing.
And I even tied it all into a bow. It's like, you know, our biggest thing now is investing. I love investing. I care more about investing than sometimes I get with insurance. But as planning in the planning spectrum, insurance is in the conversation regardless if you're talking to me about wanting to invest $50,000, you want to talk about your retirement plan, I'm going to bring up insurance. You know, it should tie into what you're investing today, your retirement plan, your estate planning, to your credit. Like, if we talk about anything you want to invest, we're going to talk about insurance. You say, hey, Devin, I appreciate it. I don't want to talk about insurance. I'm going to make you sign a waiver. Like, okay, cool. But I talk about this. When your family come to me and say, he got his money invested, but it's locked up into this account that we can't access, but he died yesterday, you know, what's going on? I said, he signed the paper. He didn't want to talk about life insurance. It's really important, man. And we shouldn't be as selfish like that. Take care of your family, man.
Yeah.
That's generational wealth. And you can do it a lot of different ways, but the tax-free, the easiest way to pass down money to your kids and your kids' kids is life insurance.
Absolutely. Absolutely. And can we touch on a little bit of investing and how you can help people invest, or even if they're not at a place where you can help them professionally, what can they be doing right now to prepare?
So investing is a very broad word. You know, investing can be into a stock, into a bond, you know, options. Investing could be just to your savings plan. You know, if you're saving up for a car, you're saving up for a house, that's investing. You're investing in yourself, right? So you
Right.
put into a plan. You have to budget. You and I are very big on budgeting. Like, you have to budget for things. So put it into your budget. All right. I want to start investing into if you're going to use Cash App or those nations. You got to start with a plan. What can you do comfortably? Is it $50, $100? You got to call for your ball. So maybe you want to get to $100 a month. Start with 10. Do a savings plan, but that's still considered investing. There's a lot of different things out there that you can get bought into. But of course, savings for yourself, so a savings plan and then your retirement plan are the first things to invest in. You want to get a little bit of that. You shouldn't invest before you have a retirement plan anyway. So, but it gets very, very deep. But I say your retirement plan and just start saving first before you start investing to the market, because the market is going to go up and down. And if you can't stomach it, you're going to get hard. So.
And like, I know even me, I'm guilty of this. Like, I'm wanting to focus on the big thing without really understanding the basics. And the basic is budgeting. Like, literally understanding what you have coming in versus what you have leaving out. Just managing your money for real. Because there's no need for you to put money into the stock market or put money someplace else when you barely making it.
Right.
Barely making it. So I'm just being real. Like, when you start actually managing your money, then you can pay your bills on time. Your bills won't be going to collections. You can pay your credit card debt down. You can pay off the balance every month, and you're not getting charged interest for that credit card debt or having a balance in your credit card. So all of these different things that we're talking about, it goes back to budgeting.
Yeah.
I'm not speaking from a place of judgment. I low before. I know how to talk about these things because I've been there before. So if I could give any advice, it would really just be, start managing your money. You got to take responsibility for your personal finances.
And getting to that, the biggest thing with budgeting and investing, you got to have a purpose. Give your money a purpose, down to the penny. If you know you got to pay a bill, change the bank account from checking to Bank of America to bill account. Give it a purpose, give it a description. You get real strategic with putting a description of things. You can be real specific and move with that purpose. And if you want to invest, okay, this is my investment fund. Okay, this is my, all right, maybe I don't believe in emergency savings, but okay, this is my money to invest in. And if my boss tell me something that I don't want to do, hey, this is what I'm gonna use to give that job.
Exactly.
You got to have a purpose. Have a description for everything. You got to be that specific, man. If you have advice and you like to go out with your friends, budget it. Say, okay, this is for me to have open bar or open tab for my friends on next Saturday. You got to be that specific.
Exactly.
Get the money on purpose.
So, we're going to spend our last 10 minutes with some questions. If anybody has any questions about anything that we talked about tonight, whether that's rebuilding your credit, planning for the future, budgeting, just anything, please drop them in the comments below so we can answer.
One thing that me and Dez always do when we start off a conversation is starting by saying we really got into business and we did everything the right way by being certified. You don't have to be certified a lot with credit, but we want to be real specific when having the proper certifications. It might delay the process a bit for us in some areas, but going to professional, being professional, have a license, being able to tell, hey, I'm certified to do this, I am certified to do this, I trained for this, I studied for this. Just give people that sense of satisfaction. It's different when you can go to your cousins when they take care of your stuff, but when it's a professional you talk to and I'm actually held liable for this, I'm going to work a little harder for you, right? And I'm held for that. So go to a professional. Maybe it's not us, but go to a professional. Look up people, Google people. That you never know. Back to that conversation we have about some things being not what they appear.
I'm big on that. Like you said, we're big on it doesn't have to be supreme. Like, go find you somebody that you can actually trust and like that has a backing. Like, everybody. Somebody just grab a question, but everybody is not. We have a lot of people giving information. There's a lot of false information out here, so you have to be careful, like who you're following and exactly what they're saying. You don't want to go down the wrong road with somebody and find out that they're misleading you. I'm big on what Devin said just now, for sure.
Do your research anyway. I could be wrong a lot, but do your research. If I tell you something,
and as you go through these stuff, like as you go through these things, as you're with us, our hope is to, especially when it comes to rebuilding credit. I don't financially, it benefits us that we see people coming back to us, like as far as the same person, but we don't like to see that because we want you to learn from those past mistakes and to go and live your life. Like, we don't want you coming back to Supreme. Like, send us a friend that has a family member, but we don't want you coming back just because you have to learn some things throughout that process. Also, educate yourself as you spend money on these things.
Yep.
That's
one thing to get a thing, but can you maintain that credit score?
right.
So we do have a question: where to start with building your credit? Only have a loan on a car through your bank.
It's a few things you can do. It just depends on how comfortable you are. The easiest way to build credit, and we don't hear this from a lot in our community a lot, is a credit card. Like, it's plain and simple. Like, that's the easiest thing to do because in a lot of cases, if you have a decent credit score, so if you have anything over a 640 credit score, FICO, you probably would not have to put any money down on a credit card. And right then and there, you can start building your credit with a credit card, and you don't have to spend any money off that credit card. You just have to take care of it properly. If you have and the trick with a credit card is literally supposed to be for emergencies. Like, it's not your bank account and it's not your day-to-day fund. So the mistake a lot of people make is they'll get a $500 credit card and they will spend the limit on that credit card thinking they have that money to spend. But no, you should only spend on that credit card in a case of emergencies. Use it for your snack fund or whatever. Try to stay under 10% of spending on that credit card when you first get it, and you will see the benefits month after month on that credit card. Always pay it on time. Put it on auto pay. Don't try to think you can figure out the system. Just put it on auto pay. Pay your balance down to zero every month, and I'm telling you, you will see the benefits of that. Another thing is Self Credit Builder. You can Google that. It works like a credit card, but it reports it's not a physical card. So what you can do is, I would tell most people to set up a 24-month plan with Self. The payments will be $25 a month. You pay it every month, and they will report you positively to the credit bureaus for 24 months. And at the end of that 24 months, you get back a large chunk of the money you invested in that. I think it's like $500 or like $535 or something. And that's a great build up. And KU was advertising a great one the other day. I'm familiar with it, but I don't have the insight. Is it Kikoff?
Kikoff, yeah.
Yes, so, Kikoff is another one.
Kikoff is $2 a month, and it doesn't have interest or fees. Unlike Self, I've heard great things about Self as well, but Self does have like interest and fees. You don't get every dime of your back.
Yeah, you don't get every dime, no.
Yeah, after the payment plan is over. So I would definitely recommend that you do your research. I back Kikoff because I did the research, open my own account, all of that different stuff. So my bio and create your own account.
Yeah, definitely. Kikoff is another good one. Like she said, with Self, you will probably invest over the 24-month period. If you have a $25 plan, you're going to invest around $600 into it. And you're going to get around like $530. So, that's a $70 loss on the back end. Like he said, with Kikoff I'm assuming you get all of everything you invest back eventually, right? So
yeah,
that's dope. So it's really a pick your poison type of thing. So yeah, that's dope.
That was a question though, because that was me in the beginning. I only had a car loan, got a credit card, credit score went through.
Yeah.
Let me put you on Kikoff. I always preach that credit can get you what cash can't. So I want you to listen really closely as I explain how Kikoff works and how you can use it to improve your credit score. So when you sign up for Kikoff, you pay $2 a month, and they are reporting that to the 3 major credit bureaus. One of the main things that I like is that you automatically get access to a $500 line of credit without them even pulling your credit. So make sure you take advantage of everything that they're offering you. There are no interest, no fees, none of that stuff. So check out Kikoff and use my link below.
Car loans are terrible to me personally. Car loans are terrible for building your credit because you have what you I don't like to I don't to me I gotta say to me personally because what you find is two type of loans. They're installment loans and then it's escaping me right now, installment and revolving, right. Installment loans is not necessarily the best for building because it's a set price on there. Revolving shows how responsible you are with the credit. You usually have a spending up there. Installment would be our car loan. That's a big one. Revolving is more like in the credit card lane type thing. So that's And be careful with these store cards too. We are terrible with store cards. Be careful
I
with
don't
store
even
cards.
recommend store cards, honestly.
No, I don't.
Like, you can only spend it. You're limited to spend it at that store. Like, why
At that store.
something else that you can spend everywhere?
Yes.
Get cash back
Yes.
rewards, points, all of that different stuff. Like, don't limit yourself.
But it's so bad we don't even understand. A lot of times, like my first store card, I didn't understand was a store card. I didn't even know it was a credit card. I just thought it
got
was
free.
Yeah. I just thought I could chill. Don't take it.
I was
But
talking to you though, man.
yeah. Oh, I did the same thing. I thought it was a free card, and it ended up being store card, and it was a credit card. You know, I was 18 years old with a credit card, and I didn't even know it was a credit card. So we have to be careful with these credit cards for sure.
So the next question we have, how do you acquire a mortgage loan that includes your down payment if you don't have any cash and your credit is good?
I'm not a mortgage. I would say seek out a mortgage expert, and the same way you would interview people for a job, or because it's different programs that we are unaware of, and a lot of these mortgage people understand these things. So anytime we have somebody looking for a home, we send them to a mortgage loan officer, and you interview these different people. Like, you don't have to give them your bank information. You don't have to give them your social security. You just tell them what you want, and you'll see who will give you the best options and the best things, and then just go from there. So just do the research. I think all of us may know someone who already bought a home.
Yeah.
So just speak to them, and we all know a realtor or two. So speak to those different realtors and be like, who you think have the best deals? It's a lot of loans that we are unaware of that we can take advantage of. So I would say reach out to a mortgage, a loan officer.
And Baller Chick, if you don't have any that comes to mind, just follow me on IG, DM me, and I'll connect you with my mom. She has a whole list of preferred lenders. So
that's the plug right there.
Right. Just DM me. What's the difference between a secured card? I guess you said a secured credit card and an unsecured credit card when it comes to credit. Really good question.
Oh, that's a great question. So we'll start with the unsecured. The unsecured is exactly what it says. That's the card we were talking about where you don't have to put any money on it. You would, if you have a 640 or better, a lot of institutions, you can apply for the card and they will tell you your balance. So if I apply for a card, I have a good credit score, they would give me $500 of unsecured money. That's strictly from that institution. A secure card is similar. It works just like a credit card, like the unsecured card, but I'm securing it by putting a deposit on it. So that's where the secure part comes from. So that $500, I would put the initial $500 on that card, and I still can use it just like a credit card. And they're a great way to build credit too. So if you can't, how it works is secure credit cards are good for building credit. So if you can't actually, if your credit score is not in a good position to get the unsecured, just get the secured and treat it just like that normal credit card. But make sure you watch out for the interest rates and also monthly fees on credit cards. If you can find a credit card without a monthly fee,
please do.
Go for it. Yeah, please do it. Because I don't want to get into it, but yeah, that's a whole different rabbit hole. Yeah, be careful. Yeah, be careful. And the thing is, if you run into these issues, DM us, DM Key. She will send you to us. And if you have a question, if you like, hey, I got offered this credit card, because even with like Credit Karma, some of the credit cards they send you, like they're getting paid to advertise those things to you. That's not necessarily a good or great credit card. Like they're just getting paid. And you might not get approved for it. A lot of people don't understand. They tell you your approval odds. They're not saying you're going to get approved for that card. Yeah. So be careful. If you have any questions, if anything looks fishy, shoot us a DM. Follow us, shoot us a DM. Or shoot Key a DM and she'll get you to us. And we answer questions like that all the time.
Right. So pay it down to 0 or down under 30.
Just depends. I'm more of a keep it under 10% type of person. If you want to stay out of debt, I would say take it to 0 for sure. But if you are trying to get comfortable with using your credit card and you're trying to understand how credit works, I would say 10%, because one thing they don't tell you is banks hold the right to close your credit card. So if they see that you have no activity on it, they can literally say you can have a $10,000 credit card. If you haven't used it in 6 months, they can close your card.
I didn't know.
So yeah, like in COVID, they closed a lot of credit cards. If you Google banks closing credit cards during COVID, they closed a lot of inactive credit cards because they panicked and they thought no one knew where the economy was going. So the banks didn't want to have money loaned out to people who weren't using it. So they closed a lot of credit cards during COVID. Yeah, and what community was affected the most with that? I mean, in some things they shrink. So some people had $10,000 credit lines that they took to like 5,000 to 4,000 because this person wasn't using up to 10,000. People were punished for being good credit card users during COVID. So yeah, those are things like this. Yeah. Follow us on Supreme. We drop things like that a lot of times. Like we drop those type of things a lot. So yeah.
I always preach in my community to pay down the balance of their credit card if you're in a position to do that. And the reason why is because credit cards have one of the highest interest rates out, anywhere between 26%. So what people don't understand is every time you leave a balance on that credit card, you get charged for borrowing the money. So if you're in a position where you can pay off the balance in full, please do that. Please, because if not, you're getting charged. This not
and that's what I say. It's a lot of the thing I hate the most about credit is there's no rule book. Like the credit bureaus don't tell us exactly what they're looking for and how they're dinging us. So you might find a method. So if you're trying to build credit, you might find a method of just having your credit card at zero, not to effectively work in building your credit. Like, cause some people get penalized for not using a credit card. It's crazy. Like they penalize you for not using your credit card at all. So if you're building, you want to show some rapport. But if you have a good credit score and you don't have a need for a balance, zero. And then some people get good scores for not using it. Like I said, the credit bureaus are all confusing. They won't even tell us. They even give us percentages. They don't give us exact information because if they give it to us, people are going to follow, and people will be in a lot better shape. So they prey on ignorance in a sense.
They work all day.
Yeah.
This is a really good question. Not credit related, but how do you find a 401k/retirement plan when your job doesn't offer it?
So basically, a 401k is just a traditional IRA with a different tax cut for that company. That's why they give you quote unquote free money. You can easily open up a traditional IRA within a regular financial institution, whether it's your bank or a regular financial advisor, or lastly, you can DM Supreme and we can work around some nations of it. But a 401k is a IRA with just some sponsored by that employee for a tax benefit. So in that instance, you are just allowed to open up your traditional IRA, which you can do that if you do have a 401k as well. But open up a traditional IRA is the easier fits regarding the same tax considerations, but it's a deeper area you can go into regarding how your tax work with it. But the traditional 401k the traditional IRA is the easiest approach to take.
That was a great question.
And I will also recommend, if you're a 20-something and you're on this live right now, you need a Roth IRA, hands down. And like Devin just said, like you can go to Supreme and they can help you, because I do recognize that everybody not like me. You don't care about managing your money or looking at these different investments and stuff. So if you want to be hands off and you just want to send your every month or whatever and have somebody manage that for you, definitely connect with them. But everybody needs to go ahead and start investing for their future retirement, because we need more money than we think we need to actually.
Yeah. That's in that area where people say $1 million isn't a lot. It is a lot of money, but in the retrospect of what what needs for years and years to come, it doesn't really add up to supplying you and your spouse or taking care of your responsibilities you want to. So I'm a firm believer in having a trusted advisor, financial advisor, an accountant, a doctor. Even if you can't cut your own hair, go to a barber every now and again, right? You should at least have someone check in periodically to make sure you are doing things properly. So.
Right. And y'all, let's just get inflation. Like right now, the price of literally everything is up. Everything. And I'm not even trying to be funny, but I went to Bojangles and y'all always get a 2-piece with 2 bags of fries and a sweet tea. Y'all, my meal was $9. And I'm like,
what, 2-piece?
Yeah, it's going up. Yeah, it's going up. Everything's going up. Yeah.
It was $9. Yeah. I was like, what did I get? This used to be $5.11.
Oh wow!
Help me understand.
Yeah, it's crazy. No, it's crazy. It's crazy.
So
it's crazy.
If that'll tell y'all to start planning now, I don't know.
Yeah. it's
No.
the same way that compound interest works. Things are going to go up. It's not going to get cheaper, so you got to invest have the same mindset in mind when trying to invest. You don't have to increase that $50 a month for 1 year. It may need to be 75. You have to increase. You get a raise at job, you need to increase what you're investing and saving and putting your 401k as well.
Right.
Along to the match and go above the match. And yeah.
And don't start with what you can, because it's really about the consistency that's going to add up over time.
Yeah.
Not doing nothing is not an option at all.
So what's in your budget, though?
Yeah.
Going back to the budget. But it has to be in your budget. You have to be planned.
It's crazy how all of this is budget. Like the core of all of this, like even like with the credit and collection thing, it's budgeting. Like it's literally taking care of your money and like knowing what you have coming in, knowing what you have coming out, and what you can afford and what you can take care of. So yeah, that's at the core of all of this for sure.
Well, y'all, I don't see any more questions. I appreciate y'all so much for hopping on, giving my people some information that I could not give them. So if you're from my community and you're still on the live right now, make sure you follow Supreme on IG. And for all of you listening on the replay that's going to be on the podcast, can y'all tell them how they can connect with y'all and how they can work with y'all? Because I don't want the conversation to just end here.
Okay. Personally, I am Dez Good at on IG. DEZ. I'm tripping. DEZHAYGOOD. Supreme on IG. We're Supreme FC Group. And that's where you can find us. That's where you can find me, Devin.
On Instagram, I am DC Barnes _ Dez. Me and one of our additional partners, our tags are in our Instagram bio. So if you can find the Supreme page, we're on there. Take a peek at our personal life. We do have our other websites in our bios as well. So do a deep dive. Do your research on us.
Yeah.
Do your research on us.
But I
certified, yes.
Yeah. I will say, y'all, I only introduce y'all to good people that I work with, people that I vet. I'm not bringing y'all no Instagram stars. Like, I mean, and there's nothing wrong with being an Instagram star, but they do the work for real. So I say, if you've been listening to this live or even on the replay and you know you're not in a position and you know you need help, please reach out to them. And they have prices and plans that literally fit everybody. So
everyone,
don't let your ignorance keep you in a bad financial place.
Even if you think.
Can I say one more thing?
Okay, go ahead, bro.
Key, we want to give you your flowers. We were talking about you the other day, just on your consistency and just like I remember when you started Responsible Homegirl and just where you come from and where you're at now and just the information you're providing. Me and Devin was talking because we've been slack on content like this whole year just because everything's just been kind of crazy. We like Key be on it, bro. Like she's so consistent. Man. Yeah, like it's so like we want to give you your flowers on that. That's the conversation we had behind your back, but we were just like she be on it. So now we're proud of you. We're happy to see you continue to grow. So we just hope you continue to do great things as we know you will.
Thank y'all so much. And I really want y'all to see this Black excellence for real. Like, I don't know if we started our brands around the same time. I think we did. But it's all about collaboration. How can you help other people? Because we're working towards one common goal, and that's really to help more people get in a better financial place. Budgeting, credit, financial planning, insurance, investing, it does not matter. So if you're listening right now and you may be a business owner, you may just, work a 9 to 5, it does not matter. Who can you lift up as you climb? Who can you collaborate with and, make this world a better place for real?
For sure.
So thank y'all so much for joining me. Thank y'all for listening for this past hour-ish. And of course, you can find this on the Responsible Homegirl podcast. I think it's going to be episode 37, if I'm not mistaken. And always remember, with exposure, execution, and consistency, there is absolutely nothing you can't do. I'll see y'all next time.